Hello and welcome back to my 10 favorite people. I hope you're doing well. This is one of those concepts that once you see it, you can't unsee it. And the timing on this video couldn't be better because tomorrow we have a crucial CPI print that will have a huge impact on what type of cycle we end up getting for Bitcoin. And of course, this is because no matter what anybody tells you, Bitcoin's cycles over the past few years have not been driven by ETFs. They haven't been driven by the halving. They've been driven by Fed monetary policy. And of course, we've been documenting this on the channel for months now, but as a quick refresher, when did Bitcoin bottom at the end of 2018? When the Fed announced they would be pausing their rate hikes? And when did Bitcoin start its crazy mania bull market in 2020 and 2021 when the Fed dropped rates to zero? And when did Bitcoin peak towards the end of 2021 when the Fed realized inflation wasn't going to be transitory after all? Huge shocker there. And they announced that they were going to have to start hiking rates. And of course, where does Bitcoin bottom roughly 1 year later when they announced they're going to slow down the speed of the rate hikes and lower them from 75 basis points per meeting down to 50? And of course, that was the first small pivot. Bitcoin has a nice rally, but when did things really take off? When they announced they're going to pause rate hikes, that ends up leading to a huge rally for Bitcoin, which of course, the ETFs ended up adding a lot of fuel to that fire. And there's no way we would have put in new all-time highs if it wasn't for those added inflows from the ETFs and all the excitement that brought. But the trend shift is still very clear. And just like what we saw in 2019, a Fed pause led to a huge rally from Bitcoin. But now this local top we've had recently has very conveniently been timed with a stubborn inflation rate that doesn't want to go below roughly the mid 3%. And you can see recently inflation has been working its way up. And if you look at what Bitcoin has been doing recently, it's been struggling since its local peak in March. And the reason why this makes a lot of sense is because we know Bitcoin's main narrative is a money debasement hedge and a fixed supply asset. So easy monetary policy from the Fed leads risk assets to go up. This also explains why Bitcoin and the S&P 500 are so correlated. Monetary policy has a huge impact on risk assets. Maybe one day in the future, Bitcoin will be a risk-off asset. It definitely isn't one now. And because monetary policy has such a huge impact on the S&P 500, it also has a huge impact on Bitcoin. And now the reason why this is concerning, over the past few decades, every time the Fed has taken rates above 5% and kept them there for a while, it eventually resulted in a recession and a big sell-off in the S&P 500. 2019 was kind of a special case. We did end up having a recession, but that was due to a black swan, and rates peaked at 2.5% back then before they started lowering them thanks to some credit crises that were happening in the repo market. But what are we seeing this time around? Elevated rates for an extended period, just like 2008, just like the dot-com bubble. I'm not saying things will play out the exact same way, but if we know monetary policy has a huge impact on Bitcoin and Bitcoin is correlated to the S&P 500, rates being this high for this long can't be good for risk assets. And now this brings us back to why the CPI print is so important. The Fed has two mandates that they base their policy off of: stable prices, which of course means inflation can't be high, and full employment or good employment or whatever term they use. And we know that recently the unemployment rate has been ticking up, but it's not high enough to cut rates yet. And inflation did work its way down for a lot of 2023, but it's been stubborn and trickling its way back up recently. And this is putting risk assets and the Fed in a bad spot because the Fed can't cut rates until the unemployment rate spikes. But by then, it's probably too late and we probably go into a recession, which is going to be bad for risk assets anyway. Or they need inflation to come down more aggressively and give them an excuse to cut rates. But so far, it looks like inflation is going to remain stubborn. And now this brings us to tomorrow's CPI print. Based on the expectation from the Federal Reserve Bank of Cleveland, the expectation is 3.5%, which is in line with what we had in the last reading. So it would be flat if we were to get that reading again. which I don't think markets will react too much. We probably just continue chopping some more, and we probably end up getting something a little more like the normal cycle. Maybe it's a more boring summer because there's no reason for the markets to panic and really sell off because inflation isn't really skyrocketing higher. But markets don't have an excuse to really rally either because inflation isn't falling aggressively. If this CPI print tomorrow comes in below expectations at 3.4 or lower, I could see it be a nice catalyst for Bitcoin to rally higher. I don't know if it goes this high, but rally higher than where it is now. But if inflation comes in at 3.6 or higher, I would expect risk assets and markets as a whole to panic because it means that rate cuts aren't coming anytime soon. And right now, the market is grasping for straws and hoping that we get a rate cut in September. And just to dispel another quick rumor, if you take a glance at this chart, it looks like rate cuts are bearish and rate cuts always cause sell-offs in the S&P 500, but that's not really how it works. Obviously, rate cuts are stimulative for the economy. What ends up crashing the S&P 500 and risk assets is rates being too high for too long, and the Fed starts cutting rates to get ahead of the upcoming recession and weakness. But of course, just like rate hikes take a long time to break the economy, rate cuts take a long time to stimulate the economy. So this whole thing of rate cuts being bearish, sell everything once you see rate cuts, it's half right, because if we do see rate cuts right now, it means there's more underlying weakness than we thought. Or if we see rate cuts because the unemployment rate spikes, it means that we're entering recession and risk assets are going to take a beating anyway. But if we see inflation cool off and the market gets excited about rate cuts because inflation is coming down while the labor market is strong, I don't think that's actually bearish until we actually see the Fed cut those rates and give us evidence that there's more weakness in the underlying economy than we thought. And that gives us a very simple answer to what cycle we can expect for Bitcoin. If inflation cools off in the very near future, I would expect some euphoria and excitement to enter the market because inflation is breaking lower while the labor market remains strong. But if inflation ends up remaining relatively stubborn but isn't working its way back up, I expect way more chop and way more pain as everybody gets bored to death waiting for Bitcoin to do something. And of course, in the red, we have the macro doomer scenario. This is if inflation remains very stubborn or even continues higher, or if we see a huge spike in the unemployment rate. I would expect a lot of pain for risk assets like Bitcoin. Again, all of these are very, very rough drawings. The chart isn't going to follow them perfectly in any of these three scenarios, but this is just a general framework of the three main possibilities we have to watch out for this cycle. Now, there is one more piece of hopium for the left translated cycle thesis. If the S&P 500 can stay strong because of government deficits and currency devaluation, and if we follow the seasonality pattern we've seen from previous election years with strong Q1s, which we've been following very closely up to this point, maybe if the S&P 500 does well June onward, of course, that's going to require inflation to play along. This average that we have here isn't just inflation years, this is all years. So us having inflation does throw a wrench in this a little bit, but it's still a possibility. And if the S&P 500 goes straight up from June through the end of the year, I think that could help Bitcoin play out this left translated cycle thesis as well. But of course, inflation does kind of add some complexity and variability to this outcome because the Fed can't just lower rates because it sees economic weakness until inflation comes down more. So of course, we're definitely going to wait and see what CPI comes in at tomorrow and cover it. As for right now, Bitcoin's price action doesn't look too great. It's been a slow bleed for weeks now. I would not be surprised if there was a bounce sometime soon just to squeeze overconfident shorts, but this chart so far doesn't really jump out as something that's incredibly bullish and is going to skyrocket in the near future. But of course, that can change between now and the weekly close, depending on what we end up seeing for that CPI print. Bitcoin dominance still looks very strong. It still looks like it wants to break out higher. Beautiful retest of this previous breakout level. still grinding higher here, and that means that majority of altcoins are likely going to struggle and underperform Bitcoin. Of course, there's going to be winners. Some meme coins will do great. Some new projects will do great. So if you can pick those few projects, that's amazing. But generally, we expect altcoin underperformance as long as this is happening. And this is very clear if you look at Ethereum. It looks like it wants to break down any day now. And ironically, I might be tempted to buy some because this might end up being one of those sell the rumors, buy the news scenarios, because there is no hope at all that this ETF is getting approved next week. And I think the market has fully priced in that zero chance of approval. And I think anybody that sold because the ETF isn't getting approved already has. So it could be a sell the rumor, buy the news event. But of course, we'll monitor price action going into it. I'm already pretty exposed to Ethereum right now, so I'm not super excited to jump in and buy at current prices. But if we see more selling into the ETF denial, I might be tempted to add to that position, even though it's already a relatively big holding of mine. But because of that Bitcoin dominant strength, I'm still in relatively conservative positions. I don't want to try to pick altcoin winners right now. I feel very comfortable holding Bitcoin, Ethereum, and Solana. Solana also looks relatively weak. These big wicks to the upside aren't great. We had some distribution up here, and now we're waiting to find out if this is redistribution before falling lower or reaccumulation before going higher like we had over here during this rally. But of course, we're not going to know that until we see which way this ends up breaking. And of course, to nobody's surprise, that's likely going to have a lot to do with what Bitcoin ends up deciding to do. But as of right now, doesn't look that great, especially with what we're seeing from Ethereum and Bitcoin as well. But of course, we'll have to wait and see. For now, I still think Bitcoin is in a fair value area. If you have plenty of exposure, I don't think these are great prices to rush in and buy. But if you have zero exposure or just learned about Bitcoin yesterday, if you're holding it for a very long time horizon, I don't think this is a terrible place to start nibbling and build the habit of buying things and then maybe adding more at lower prices when there's better opportunities. And in terms of how low we can go, I still think it's very likely we see the low 50,000s. Not a guarantee, and that's why I put likely and not very likely, but I do think we see it at some point this summer, no matter what scenario ends up playing out. But if we do get some magical left translated thing where we run to 100,000 this year because inflation plummets all of a sudden, then maybe we don't end up getting those prices. But as of right now, I do think 50K is pretty likely over the next few months. And of course, finally, when in doubt, zoom out. No matter what type of cycle we end up getting, I do think Bitcoin will do well in the very long term. Money printing isn't going anywhere. Currency devaluation isn't going anywhere. And whichever one of these cycles ends up playing out, I still think Bitcoin does well as a money debasement hedge in the very long term, which is why I always maintain exposure, even if I have some serious short-term concerns because of macro weakness or stubborn inflation or the unemployment rate taking its way up month after month. But of course, we're going to monitor things going forward, and I will definitely let you guys know if something changes because we get some huge spike in the unemployment rate or some huge spike in inflation, which causes the market to panic as rate cuts completely disappear from the rest of 2024. But as always, thank you so much for the support on the recent videos. Hopefully I explained that thesis pretty well, and maybe I'll cover these charts in a little bit more detail in a future video because there's a lot of parts of this correlation I skipped over, and it's really crazy when you look at how correlated Bitcoin has been to monetary policy, even though most people try to act like it's only the halving that matters or only the ETF that matters. But of course, now that Bitcoin is as large as it is, macro plays a huge role as well, and you see that very clearly with its correlation to the S&P 500. But anyway, thank you so much for your support on the recent videos. Let me know what type of cycle you think is the most likely, and I'll talk to you soon.